Good morning, everyone. We're back. Season 2 of SFI Live is here. It's August. Supposed to be midsummer, not looking at the weather that's outside at the moment, but supposed to be midsummer. So welcome back to SFI Live Season 2. We've made a few changes. You might have noticed from the introduction music, but also we're starting to bring in some new special guests. So thank you for joining us today. It's nice to have so many of you here. We are interactive, so the chat room is open, and good morning to everyone that's posting the messages in. We will be taking your questions all the way throughout this webinar, so do feel free to pop your questions in there and I will put it to the panel. So before we go on anymore, the topic of today is self-employed and contractors. There is a reason for this. We've recently covered it in the SFI Not So Live podcast, that there is a feeling that self-employed applicants are particularly struggling. We've broached this topic before, but particularly struggling during the pandemic. So we're here to offer a bit of guidance, a bit of advice, and a bit of support to give you some insight into the self-employed products and what you can do to get those applications through. So before I waffle on anymore, it's time for some introductions. So Tony, why don't you do an introduction first?
Yes, morning everybody. My name's Tony Hall. I'm head of mortgage sales here at Saffron. I've been with Saffron now just over a year. And I've been in the industry now for, 34 years, 2 weeks ago. And a lot of that spent in specialist lending.
Lovely. And Holly?
Hi, I'm Holly. I am the Intermediary team leader at Saffron, and I have been at Saffron now for 6 years, and I look after the telephone-based BDM team.
So that's the faces. Anybody new that's watching us today, these are the faces you'll see every month. So please make sure you do join us. We do a topic every month, and I promise we try not to bore you. During this webinar, there will be an opportunity for you to submit some responses to some polls just to help us out and help us guide the conversation. So the first one's live. They'll appear on your screen. If you could just copy it, we just get a live view of which ones of you have responded, not by name, so we can keep an eye on that, and it's useful for us for ones going forward. So without further ado, let's break into what we're here to talk about today. And we're here to talk about self-employed and contractors and their issues. During lockdowns and sort of coming out of the pandemic, and as restrictions are lifted, they're still finding they're having a little bit of an issue, with getting a mortgage and getting mortgages through. So we're here to talk to you about how that can help. Before we wrap it on, we do actually have a special guest. They're not joining us live. I had the pleasure of meeting the lovely Melanie Spencer, I keep changing her name, from MCI Mortgage Club, who's head of MCI Mortgage Club. So I met her, albeit virtually. We did meet this week, and I asked her a few questions. The first thing I asked her was about the wider market and what the wider market looks like for the self-employed. So if you just bear with us for 1 second, we're just going to play Mel's response to my first question, and then we'll talk about it.
So since the pandemic began, yes, we've seen a big impact on mortgage applications for those that are self-employed and contractors. So yeah, 100%. With regards to how we've been impacted, a lot of the lenders reduced the LTVs. So you're looking at it went down to 60% loan to value. So then you got those customers that wanted to borrow more, not being able to do so. There was also a big blanket approach across their thinking. So this did impact their existing customers. So not only for anyone new wanting to remortgage or purchase, go to that particular lender, their existing customers couldn't even do anything with them either. So there was a lot of impact there. So during that time, having a blanket approach probably didn't really work. Some of the lenders, the affordability calculators were impacted as well. So, from the affordability point of view, they weren't able to borrow the amount that they would normally be able to. And I think the biggest impact which I saw was with regards to the grants. So the government grants that were issued, they actually self-employed businesses would have took this out based on advice from the accountants, because having that money in their account just in case something did go wrong, or maybe they had to change the way that their business worked, they had to rethink about their business model, and then when they went to apply for an application, one of the questions would have been in there is, did you take out the grant? And that showed that actually there could have been an impact on their business, but actually some businesses would have just taken out that grant to have that money sitting there. So even though their businesses might not have been impacted, that did affect the applications. And then when it went through on underwriting, they would go into really detail about that, and they want to understand more, so the underwriting would take a lot longer as well. So I'd say that was kind of the biggest impact there.
I think we're on mute, Jay.
You're on mute, Jay.
Trust me to be the one that does it. I'll start that again. That was Melanie from M02 Mortgage Club, just giving us some insight of the wider self-employed market. Excuse me, and what they're seeing throughout it. So, Tony, for SFI Live, self-employed is becoming quite a big talking point for us, isn't it? Because we've really ramped up support for those that are self-employed and tried to be as flexible as possible. It's a developing issue. Obviously, it has been in the national press that people have been rejected for mortgages due to what's going on. Why is everyone so interested in what the problems are for self-employed? Why is it such an issue?
Well, the pandemic's created a number of issues for the self-employed, which Melanie's just discussed there in that video. You know, you've got the loans, grants, lockdown, forced closures on trading, impacts on trading, etc., which has all been a massive impact. And some in the self-employed sector have done incredibly well from this environment, and a lot have struggled, particularly when it comes to wanting a mortgage. I think, you know, as Melanie said, the overall uncertainty has led lenders to increasingly be more cautious over their lending to the self-employed, and have been applying far greater scrutiny on what they'll accept, or actually, as we've seen it, that, you know, it's tailing off a bit now, and we're sure we'll come to that, but actually walking away from the market and just saying, look, this is not for us right now, thank you. So for those, you know, genuine applications for people who are quite creditworthy but just happen to be self-employed and have, you know, taken control of their own futures in that way, it's been a challenge for them, you know. So I think that's why there's such a big news story, because as well, the amount of newly self-employed since the pandemic is growing. Now, that obviously won't impact them yet, because nobody who's just started will be able to get a mortgage, although give it 12 months and come and talk to us. So I think there's a far growing base of self-employed to come. Those who were employed, who have either, you know, been made redundant or on furlough and decided to leave and go their own. So I think there's a growing need as we go through the next 2-3 years.
I think I can see that. Obviously, I work in the media, so I've seen a lot of stories about people switching to self-employed, having some lost their commitments to their business that they work for because they weren't treated properly, so they moved across. Now, she did mention the SEISS grants, one of which is now currently available and are being applied for. Now, they are affecting applications, but how do we go if they have taken them, as Melanie was saying, and not spent it? How do we get around that? To either of you?
I'll let Holly do that one.
Thanks. So for anybody that's taken a grant previously, we can consider them. We just need to know as to sort of why they've taken it. Now, as Melanie said, it is mainly because it's accountants' advice to say to take it, to have that sort of buffer there to protect them. So it's really we'd have a look, see what their last 3 months trading is like. So are they back trading? What are they doing? Is the business back to normal levels post or sort of towards the end of this sort of period that we're going through at the moment? And then to make a decision from there. The one thing that we are cautious of, and I know that the underwriters are especially cautious of, is has the taking the grants maybe inflated their profits or how the businesses work? So if that's the case, we may look at maybe taking a slight deduction. We're taking the grant out and seeing how the business is running from there. But it's just really to know, is it sustainable going forward? How has the last 3 months trading been? And really to feel confident that going forward, that's going to continue in a more positive light than it has done over the last 12 months.
Okay. Tony, we were featured in the national press as Saffron, commenting on this because it was very focused on, you know, it was kind of all lenders are not lending to self-employed because a few of the sort of, certainly the high street banks had said, we've had enough. But actually, they're back in the market, I noticed, and they've kind of, some of them, not all of them, have kind of dropped that thing. Do you think we put a bit of pressure on them? Do you think they actually realised they were perhaps being a little bit too strict on their terms? Or is this just a a process that's happening just because we're heading out of the pandemic?
I think it's a mixture of both. I think definitely there was maybe not other lender pressure, but because the big lenders have got enough volume in areas that don't cause them to scratch their head to not worry about things like self-employed in this context. That's the bastion of us as building societies and the more specialist lenders who are prepared to take more time to look at a case. I think there's clearly government and, social pressure for the recognised institutions to show a bit more solidarity with the market. So I think as a result of that, lender criteria is starting to open up. You are seeing lenders coming back to their pre-pandemic criteria for the self-employed, albeit still with some stipulations, but it is getting easier. There are now a couple of lenders who are publicly saying they will ignore 2021 accounts. So they're recognizing the pandemic year and saying, actually, if your business can demonstrate what it's doing now, then that's something we're prepared to have a look at. And as a lender, that's something we are closely reviewing, and I expect us to make announcements in that area quite soon. As a key lender specializing in the self-employed, it's an area that we've been tracking through quite closely. I think it's opening up. Obviously, on the other side of the thing, there's a bit of a rate war at the moment, and it's some very, very cheap rates for people out there at the moment, which is good. So if you have got a self-employed business that's going well and you can demonstrate that, there's probably never been a better time in terms of affordability and cost to move on.
Lovely. Before we move on to talk about specialist mortgages, Holly, I think it's a good opportunity for us to come in and say, what are the criteria for those self-employed on your standard mortgage? So if they've got an eye on one of your products and are self-employed, what are your criteria with regards to those products for the self-employed?
So if the applicant has got 3 or more years accounts, they're eligible for all of our standard product ranges. So everything from your standard residential to buy to let as well. And that's available up to 95% loan to value at the moment, especially for first time buyers, and 90% for home movers. So that's when they've got 3 years of accounts. Now, if they've got any less, so 1 or 2 years, then it would go on our special self-employed mortgages, which goes under the residential special situations range, and that's currently available up to 85%.
Lovely. Well, move on to specialist mortgages now, and actually I'm just going to play you another video from Melanie where I asked her what lenders can do to support the self-employed applicants. Let's hear what she has to say, and then we'll have a talk about specialist mortgages and some news on those in just a second.
Yeah, so I think lenders could assist the self-employed customers more by really having a common sense approach. So understanding the business in a lot more detail. So, going into, why was it impacted? If you talk about hairdressers, etc., they would have had a big impact because they wouldn't have had income coming through because they were actually closed. But then if you look at the previous 2 months, they're out of their income would be going through the roof because they were fitting in more hours, and actually they've probably gone back to normal business levels now, if not more, really. So you really got to understand the businesses that those customers are part of, and understanding really the direction of that business. What about if they have diversified, what about if they have changed, and you think really from self-employed or from businesses, they want to make things work because that's their source of income. They're not employed, so they need to make their business work. Then maybe thinking about kind of what you're going to accept. So having the last 3 years accounts, that probably won't work now. So really looking about what you can accept from that business. I think that's what lenders need to do.
Mute again, Jay. Honestly.
I think I need to change the battery in my mouse. I'm using that excuse. So some good points in there from Mel on what lenders can do to support brokers and their applicants. So I want to touch on that. We've listened to what she had to say. Any points on that, Tony? Because she said something that you love to say regularly.
Yeah, well, you know, we didn't change. We've always been at common sense, to get the word across that I'm glad Melanie used. But we've, you know, at Saffron, we've not changed our position from pre-pandemic or beyond. You know, we've always been in that mindset. And actually what we've done during the pandemic is make changes to our policy to allow our underwriters even more discretion to make that common sense decision. So we've made it easy for them to really consider both sides of the spectrum of a case and go, okay, I'm going to accept that. So it's not doctrined. If you've got that, you've got that, you've got that, we won't help you. Now, that's not saying that we'll do everything, because we clearly won't. All right, because the applicant has to demonstrate they can afford the loan, and the property has to be, you know, appropriate for what our policy is. But we're here to try and say yes as much times as we can. Now, that might take a bit longer, and we might ask a few more questions to get to that decision, but we will get to that decision for you. And I'll just say there's more to follow on that front. So just keep looking out for announcements over the next few weeks.
Okay. I'm going to go on to another video from Melanie in just a second. Just wanted to let everyone know that I have noticed your questions, and they do fit beautifully into our next section. So we're just going to get the last video from Melanie out the way, and then we'll come to your questions. So I'm not ignoring you. David, your particular question is very case focused. So I'm going to pass your details on to Holly, who can pick up with you. We can talk about yours on a case by case basis, but the other guys, we will get to you in just a second. So I asked Melanie a simple question as, do you think there's some more reliance on specialist self-employed mortgages across the board before we start talking about ours? So this is a very final response from, and a very kindly Mel giving up her time to do this. So this is our last response.
Yeah, so I think that as an industry, we have been more reliant on specialist lenders and those products out there, and mainly because a high street typically probably wasn't accepting self-employed clients at a higher loan to value or their affordability, and indeed the grant that I mentioned earlier as well. However, I do know that some of the high street lenders have started to become more flexible. So, you know, not just taking the last 3 years account, so they're actually looking at you know, the last year and kind of where things have changed. So, you know, a couple of lenders have started to ease, but I still think there is a need to have that specialist, because not one case fits all, and every circumstance is very different. I still think that as a self-employed customer, they're going to be more motivation in order to earn money, which means that they're going to make their business model work, or they're going to change what they do. Whereas if you're employed, then, you know, some people that are employed might have been on furlough for a year and just accepted the fact that they're not working. You wouldn't get that from a self-employed person. So they could be the main earner of that particular household. What about if their partner doesn't work, and they're going to need to be able to bring in some income. So I think, for self-employed, it's probably been a bit, I know you got the risk model, but I think it probably was a bit harsh on, what they could and couldn't do. So I think, that there needs to be that product out there where they've got that common sense approach to it, and you really, really understand that customer.
A massive thank you to Melanie for her comments. I'm not muted. I
was playing mute bingo then, Jay.
Trusting to be me and the new format. So let's address some of the things that Mel was saying about self-employed products. Now, we know for a fact that we've been one of those lenders that has been that flexible. So Holly, let's talk about the criteria of the self-employed product. Let's break down the product and talk about, I noticed I moved to Holly, break down the product and what's available.
So as I mentioned earlier, we do have a special situations mortgages called our self-employed product range, and that is available up to 85% loan to value. and we have a variety of different products available in that range at different loan to values. So that's for applicants with 1 or 2 years accounts, or it's also for applicants that may have changed their trading style. So say, for example, they've been a sole trader for 2 years, but then they've moved to a limited company and they've only got 1 year's accounts as a limited company. In that scenario, you'd be putting them on a special self-employed product range for them. So our system is built in the background if there's been a steady increase year on year to automatically take the latest year's figures, as long as the underwriters, when they come to assess the case, feel that that is sustainable going forward, and they'd want to know a little bit more. As Tony said earlier, there's quite a lot of questions that we may ask if there's certain things, and one of the key questions that the underwriters ask is, so how have they been impacted by the pandemic? And you know, there's a lot of businesses out there, restaurants, for example, that only used to do sit-ins, but then started to do takeaways so they could still trade during the pandemic. So you can see a lot of positive stories where people have adapted so they can still trade and earn money throughout the pandemic. So we're taking a view on things like that, but we'd always need the full years of accounts, a full 12 months on that self-employed product range. And as I mentioned, 85% loan to value.
And that 85% is relatively new, Tony. This is part of an ongoing review of these specialist products, isn't it?
Yeah, exactly. As I said, we want to demonstrate our support to the market. So we're really comfortable at 85. And in fact, we're going to go a little bit higher very soon as well, back to where we were before the pandemic. And we didn't pull out of it as a result of the pandemic as such, but we were at 90%. But we expect to be back in that space to support the self-employed in that 1 to 2 year category soon. And obviously, if you're not registered, register with us and make sure you get the latest updates to know when we do things.
We'll give you all those details at the end of the webinar, so you don't have to try and remember while we're waffling on. But we will give you details on how you can register. But I think that's vitally important to give up to date. This is a good chance to bring everyone's questions, actually, because it is relevant to what's coming in. So feel free to jump in and answer, Holly. Would you consider self-employed who went bankrupt 5 years ago? If so, what would be the minimum deposit?
So if they have been discharged bankrupt, as long as they've been discharged for 5 years, then we can consider them. And then it really depends on whether they've got how many years accounts. So if they've got 3 years accounts, they can look at our standard range with no loan to value caps. And again, with the self-employed, I'd say the higher the loan to value, the potentially harder it is to get through. But it just depends on how they've manage their finances in the last 3 years. Has there been any signs of financial pressure? Is it likely that they could be impacted again? Is the mortgage going to have any impact on them? So it's just sort of, there's a little bit more caution on it, but as long as they've been discharged for 5 years, it just depends on how many years self-employed accounts they have.
Okay. Aaron has asked, so he's put, so you would still base on 3 months if the ISS loan had been taken out. I think maybe it's worth just saying if they have taken an SEISS grants out, what you would look at in order to be able to process the application, Holly. Maybe we could break that down a bit.
Yeah, so we'd still look at their trading years account. So the final figure, whether that be limited company, we can look at salary and dividends if they're between a 20% and 99% shareholder, but if they're 100%, we can look at the net profit after tax and salary figure for affordability, or if they're a sole trader, it's the net profit figure showing on their SA0302. And we would just need to see what those trading figures are, and then if they've taken the grants, has that impacted and sort of boosted any of their finances? It'll show on the accounts if they have. And then also, what does the last 3 months trading accounts look like? So we'd ask for 3 months bank statements for both personal and business. So we'd need to know a little bit more about what the activity is in and out of there, and then the underwriters would make a decision from there.
What sort of things, just on that, just to elaborate a little bit on that, because I found that quite interesting when we talked about it before, what you'd look at in those 3 months. So, because we was discussing that people perhaps don't realise an underwriter might look at something that they might not consider, or at least have a reason and justification. Can you just break those down a little bit, things you might find on a 3-month statement?
Yeah, so with the business bank statements, what we'll be looking at is funds in, funds out. Where are they spending their funds? At the end of the month, have they got a good reserve in the business that's sort of helping them, or have they really had to dwindle down their funds to next to nothing, and then they've got to go sort of build it back up over the following month? So that's really what we're looking for on that. And then with personal bank statements, it's really the usual, income, expenditure. Is there anything on the bank statements that might cause concern, like heavy gambling, for example, or transactions that with no explanation of in and out? One of the key things I know it's quite prevalent, and sometimes on bank statements, I'm sure the brokers will agree that sometimes people put wrong references on, and that can then cause confusion. You might be asked about that, but you might have been putting, first-time buyers, maybe a bit younger, would have put something a bit funny on there, and there's just sort of questions like that we might ask on there. Not saying everybody does it, but yeah, it's just the usual. It's the red flags to look out for. That if you're looking at it as an individual and there's something that raises a question to you, it's most likely the underwriters are going to ask you the same question. So it's taking that sort of sensible approach and thinking, okay, I need to know an explanation for this particular transaction.
And Tony, I'm going to let you have a chance to talk. During the application process, you can submit additional documentation. We've got a notes feature. Do you want to explain how that can really benefit the brokers? So, all the questions that they want to ask.
Yeah, exactly. So in terms of what Holly has just mentioned, to say we'll still ask the question of ourselves, but if we already have the answer, then we don't have to come back and bother you and delay our process. It makes our decision a bit easier. So, there's lots of ways. We do have a notes function within the portal, which you can do at DIP or at full application. So you can provide as many notes as you like. So if you've got a case that is complex, that needs a story to be told, tell it us. That's what the notes function there is for. Our underwriters are good, but they're not mind readers, which is quite lucky, because some of the time they'd be quite upset with the way I'm thinking. But so do please tell the story. That really helps. The other thing is, if you've got bank statements and you can see entries on there where you think, actually, that's going to raise a little flag, write on it. We don't mind that. Tell us what it is, or again, reference it in the notes. Just support your case. We are working, Holly and I and the team are working on providing support and guidance for our partners to help them understand what right first time looks like. So that's going to be coming soon to help really explain, if you do all this, you shouldn't have any surprises with your case. But until that point, help us to help you by giving us as much info as you can in your notes. Or if you are stuck, call the team, live chat the team. Our guys are all sat there on web chat all day, and we got a 5-star web chat service. So do use all the functions that are available to you.
That's vital. And again, at the end, we'll sort of direct people to the website where you can sign up. So you notice from our poll, there are quite a few of you who haven't worked with Saffron before. If you're not getting updates, now's the time to get yourself signed up. It's really quick. I'm doing a demonstration video, so on the next one, you will get to see how easy it is, but I haven't done that just yet. David, we will come to you. We'll pass you details on Holly. I'm just going to pick that apart and see if there's any questions that I can ask to the wider audience, so they can see if they've got any questions. But in the meantime, Puneet has said, I have a client with 2 flats on same title, basic income from the properties only, wanted to refinance with capital to purchase more buy-to-lets. Is that possible?
Unfortunately not. So we require the flats to be on a single title. We won't lend on multi-units effectively. So it'd have to be a leasehold, and then we would consider potentially a remortgage of one, but we can't consider it sort of a multi-unit setup.
Okay. Thank you. Ushwell's asked, would you consider 1-year accounts? We know the answer to that one. And do you also consider help to buy applications?
So we can consider 1 year's accounts, but unfortunately we don't help on the help to buy scheme.
Okay. Keep your questions coming, guys. We've got plenty of time to answer them. So on to Brian. This is very short, so Holly, maybe this will This will strike a pose to you. So 20%, 25% company directors' salary and dividends.
Yes, that's correct. So if they have a 20% to 99% shareholding in that limited company, it is salary and dividends. However, if they have 100%, or if it's a joint application and both applicants make 100% limited company director, then we can look at the net profit after tax and salary figure for affordability.
Lovely. Just on self-employed, it's something we've discussed before, and we keep going on about putting more information. I was just pulling apart David's question that he sent to us privately. Accountants can be a nice tool, can't they, for the self-employed, getting the applications through? Because surely what the accountant tells you is quite respectable. Tony, would you consider accountants' letters or recommendations or?
Yeah, as I said, we make it clear on our A to Z guide on our website, which again is under review to make it even clearer for everybody. But that tells you the qualifications we expect to see from your accountant. So we won't accept every accountant. We'll only accept those with the relative accreditation. But no, look, we'll go to accountants if we need to, but we won't bother them if we don't. So again, it's if the accountant is required to support the case, and very much so with 1 year's trading, because we're looking at projections and confirmation from the accountant that this level of income is sustainable, because we're making a decision based on a very small period of trading. So in those scenarios, very important. So we use it, but if we don't have to use them, then we won't, because obviously if we use them, it will slow down the process, because we have to write to them, wait for their response, etc., etc. But very, very useful for us. And so, but do check the website for the qualifications that you will need your accountant to have.
Brilliant. Guys, just so you're informed, roughly 11:45, so about 10 minutes time, we'll be moving over to a criteria clinic where you can ask about any Saffron product. So if you've got any cases going through at the moment, whether with Saffron or not with Saffron, and you'd like to sort of find out a bit more about criteria and application process, now's the time to get your questions in. I'll log them and we'll put them to the guys at about 11:45. So back to your questions for now. Dorindo, so I have a joint applications. They're both self-employed and salary and dividends. Looking to buy a new build flat at 75% LTV. The building has 8 floors and a rooftop with a commercial unit underneath. It's a coffee shop and a gym. This is very specific. Would it be possible, Holly?
That's fine. Sorry, got distracted at that moment. So yeah, we can consider new build flats up to 75% loan to value. That's on repayment. If they're looking to do interest only, you're restricted to 60% loan to value. Our maximum number of floors is 5, but we can consider higher. It does just depend on the location, what the property looks like, potential for resaleability. There's just a few questions the underwriters would look at and be guided by the underwriter's comment. The difficulty that you've got with this particular case is actually the commercial underneath. The coffee shop will be deemed as too high risk. And again, the gym would be quite high risk too, just through to customer traffic, the equipment that they would have in there and things like that. So we're quite cautious with properties above commercial, but just always worth referring over, because it's not all commercial that we restrict. It's just things like restaurants, shops with high customer traffic, shops with late night opening hours that could impact sort of the area that they're within. So yes, I'd say on that case in particular, it would be unlikely because of the coffee shop and gym underneath. But new build flats are absolutely fine with loan to value. And we also have a great bit of criteria that I'll drop in now, is that we also do 95% loan to value on new build houses, which we always like to shout about too.
I'm going to be talking about some 95% in a little while. I've got it on my list. No, it's fine. Get it in early so nobody will leave. So, guys, if you're looking to hear more about that, we'll be back in about 10 minutes' time with that. But for now, another question from Michael. Client is self-employed, but the spouse is on 0 hours contract. Can you look at the spouse's income on a 0 hour contract?
Yes, we can, providing that they have 2 years experience as a 0 hours contractor. Doesn't need to be with the same employer, but need to be provable that they've always been on a 0 hours contract. And that's fine, because they'd be the secondary income earner. We would restrict the loan to value for 0 hours contractors. So they would be capped at 80% loan to value.
Brilliant. I'm not going to read out what Malcolm's saying. She might get a big head, Holly. I'm saving your question for 10 minutes time. We're going to criteria. I'm just going to quickly skip this very long. So from Malcolm, I'm going to read it out.
No, don't read it out. I've got to deal with this afterwards. Appreciate that, Malcolm.
So from Morning Saffron Building Society Mega Team. I'll take that because I'm not one of the team, but I'll take it. Nice to have Specialist BDM of the Year on the panel. Question is, what one thing makes the Saffron Building Society underwriters throw their heads in their hands with self-employed applications? And a question for Tony, are you parking your lending tanks on the self-employed lawn, i.e. are you after increasing your self-employed book? It's from Malcolm. I'm going to let you answer that. Tony, do you want to go with your element of it first?
Yeah, certainly. Yes, we certainly are. Self-employed is a key area for us. It's because it fits very nicely into our common sense arena of lending. And, you know, we're a lender that's not all about volume. It's about value and margin for our members, so that we're a profitable society for our membership in total. So we're looking at the specialist end of the market because that's where typically the higher returns for us as a lender are in terms of interest rates. So we're really comfortable with self-employed, and yes, we're looking to grow our book in that area. And that's why, as I've alluded to, and I can't give true facts away because I'll get shot for that, but we are doing more things to demonstrate more of our support in this area. So we will be announcing that as soon as we can. So
I think, again, when we come to it and we get people to sign up, you know, these adjustments are sent out via email updates. We put them all on our social channels. So do definitely follow us on LinkedIn, because you'll see all the information on there. But also, we'll give you the details on how to sign up and make sure you get all the relevant marketing information so you're the first to know. From Phil, Holly, I missed that part of the question.
I was about to say, I was ready and prepped.
What makes the underwriters throw their head in their hands in their head? No, hands in their head, head in their hands, even.
Generally, a phone call from me. That's probably.
I was about to say they were.
Starts them off, but yeah, back to the topic.
They've got Tony blocked at the moment.
Ghosted by my own team.
Holly, anything you can add to it?
Yeah, so I think the key things, I actually had a chat with the underwriters this morning, and they'd noticed if the applicant has got 3 years of accounts, is put in when you key it in on our system, the system will ask you for 3 years of accounts. So make sure that you pop that on there, because then they've got the full picture of how they've been trading. And if, for example, they've had a steady increase year on year and you want them to take the latest year's figures, by having those 3 figures there, they can make a decision to say, yes, I feel comfortable, or I've got to come back and ask questions before I make a decision. Now, if they've got less than 2 years or 3 years of accounts, so they've only got 1 or 2, of course, key in what they have. But if you have 3 years of accounts, that's what we're asking for. So please key that in on the application. This is probably more of a processing thing, but clearly labeling documents. Your application to be picked up by both our processing team and underwriting team would naturally be quicker if you're uploading the documents with the labels on. It's a really straightforward part of our system. When you are uploading documents, it gives you the option to put a description in. As long as they're not over 10 megabytes, then you can upload them. If you get stuck, give our team a call, because we're always happy to help with portal issues as well. And I think Tony said it earlier, it's really writing a story. You know, put the notes on. If there's anything on the case that you think, I'd better point that out to them, even if it's at decision in principle stage. If you put a note on at that point or upload a document, that triggers an action for our underwriters and processors to pick up. So they have to look at that information, and it will really give you that. It will benefit the underwriters because they'll understand more about what they're looking at. You know, if it's a quirk with the property type, for example, you know, we're talking mainly about income, but if there's anything about property type or where the deposit's coming from, or, you know, what they do as a job, pop it on there, because at least the underwriters then get a full picture, because the system's great and we're getting an upgrade towards the end of this year, early 2022, but we're still limited on some of the things that you can share. So by adding a note or uploading a document, you're then just helping the underwriting process and potentially helping you get that positive decision. from underwriters.
Great stuff. Sign up, have a look for yourselves, see how quick and easy the process is. I think is the biggest message to come out of that one. Message from Phil Hare. Would you look at CIS vouchers to evidence income, even though the client is a one-man band and limited company?
So we can consider CIS workers. It just for us, we would want to see the copy of the contract. If the contract is in their personal name, then we would likely pop them on the contracting product range, which again is restricted to 85% loan to value. If the contract's in their limited company name, then we may have to look at which product they go on. But naturally, they're a CIS worker, so they are a contractor. So we would look at the contract, the invoices for the last 3 months. And if there's no contract in place, we'd want to see 6 months invoices, and we take an average of the last 6 months figures to work out the annualized income.
Lovely. I hope that answers all the questions. I think that's pretty much everyone on there. There are some more questions in on criteria and other products, which we'll move to shortly. Just quickly, because we're totally focused on the self-employed products and completely bypass the contractor products because it's slightly different. Holly, you're back in the game again. Can you describe the contractor products to us and who's eligible and what contractor, what they need to have, basically? So let's give them a rundown of the whole product.
Yes, so a contract, anybody that's on a contract, it's not industry restricted, so it can be anyone in the IT industry, healthcare, music and film industry, anything like that we can consider. They'd need a 2 years industry experience, a minimum of 3 months contracting experience, and a reasonable time left on the existing contract. Now, the benefit is we don't actually have a timeline as to what's reasonable. So if, say, it's their first time contract, we may ask for evidence it's going to be renewed or there's a new contract in place to going forward. But if they're a contractor that's been doing it for a number of years, contracts one after the other, then that's absolutely fine. And we could probably look to be comfortable that they're going to fall into another contract quite shortly. Products restricted to 85% loan to value, and we've got a great day rate calculation of the day rate times the day's work times 48, which will help them for affordability. And the ones to look out for, CIS workers, as I just mentioned before, and then the umbrella applicants that are a contractor via an umbrella company will still work off the day rate times the day's work times 48, but you do have to take into account any deductions that the umbrella company do take. And once the deductions are taken, that's the annual income that we will work off of for the contractors. Other handy hints on contractors that there is no industry restriction, but also no restriction on how many contracts that they're working on. So if they're, for example, running on 3 contracts a week, all at the same time, people, for example, in healthcare or the film and television industry, they might have short-term contracts. So we can consider them as well, taking all of those contracts into account for affordability. I don't think I've missed anything.
No, I think I've pretty much covered it all, and a lot of questions that I would have asked you, such as what's a contractor, you answered quite well. Because I think my natural assumption is just straight to construction. You don't think, actually it's sector by sector. I mean, there's freelancers in my sector, they'd be the same. So yeah, really interesting to hear that. Thanks, Holly. It's 11:45, which means if you want to submit any questions to us on self-employed and contractor during this period, feel free. But this is your chance to throw your questions about cases you're currently working on, products you're interested in, and just throw the questions that are thrown at you. And David, I'm going to just quickly review your comment, or actually, Holly, can I set you a task? Just review David's messages, because they're private, but just review them and see if we can comment on what he's asked for. While he's doing that, Tony, we're back into, don't worry, it's nothing too complicated.
It's a gamble.
We are back in the 95% market.
Yes, very much so.
Well, somebody's just put on here about JBSP, so I thought it was a good chance to bring everything in. So JBSP is solely for first-time buyers, isn't it? They're asking
it is for first-time buyers, yeah. For those who are struggling to reach the affordability required, we need them to achieve and Holly, keep your ears open in case I get this wrong. We need them to achieve a 70% of the affordability, and then the 30% can be covered by their supporter, who can be a close family member. I got that bit right? So we are, we get a lot of queries about JBSP reverse the other way. So older people looking to buy and being supported by their family. That is something that we're looking at the moment, because we've been asked it a few times, and we're looking at that option. So that's really useful. A good thing about our JBSP is we can do, the term is based on the borrower rather than the supporter. So we'll take a supporter, they can go on the mortgage before their 70th birthday, but the term could be 40 years because it's based on the borrower, not the supporter, which really makes it a viable option. And we're seeing a lot of interest in that product.
It might be a good chance actually here to bring out who a close family member is, because also I think you accept more people than most lenders do as well. So that is mum, dad. I'm going to go through this as if I can remember. Mum, dad. Can we have a sibling? Are we allowed a sibling? Yeah, see. Nan, granddad, auntie, uncle. Are they allowed? They're allowed. What about adopted mum?
Yes, adopted and foster parents. There you go.
There we go. I didn't do too bad, but I think the point to get across there was that.
Job for you yet, Jay?
I know. I might come and join you after all. So let's talk about gifted deposits then, because they can be used not just on the JBSP. So it's a good chance to bring this in. You accept gifted deposits across the product range. Is that right, Holly?
Yes. Sorry, I still got my head in these accounts. Yes. So no, we can consider gifted deposits from close family members. We cannot consider them from friends or non-related parties. We have a list of the types of deposits that we can consider on our website. We're hoping that will expand in the next few weeks as our policy changes. But one of the criteria bits that people may not know is that we actually accept deposits that come in the form of a loan. So if they were to take out a loan by a financial provider or a workplace loan, it's something we would consider. We just need to know the amount, the lender, the repayment terms, and we'd factor it in for affordability. So that's sometimes a bit hidden nugget of criteria that sometimes people just don't know that we do.
That's really useful. I didn't know that. Really useful. That's really good. Sorry, just going back to 95%. Holly, I'll let you go back to your accounts. Back to 95%. I mean, when did we come in? Last month, wasn't it? So we entered back in. What's the plan moving forward? Has that had the impact you expected it to? I know we discussed the fact that it went down to a handful, didn't it?
As I said, we're not greedy. We're not after the top of the market, So we're seeing our, and we're deliberately priced in our product to be where we want it to be. But we're seeing a lot of first-time buyers in the 90 and 95% range now. So both, because we slightly reduced the price on our 90 when we bought the 95 in to make it, to balance it out. So we are seeing good traction on that. Obviously, what you can see in the market outside of us is a bit of a rate war at these high loan to values, as those lenders who require more market share are reducing their prices to get that market share in. Now that the stamp duty, holiday is off, and therefore the market's slightly cooling. They're doing their best to get their volume. So that's not our bag. What we do find is quite a lot of, first-time buyers will go to the high street first and get told no. And then that's where someone like us comes in, because we have a far more open approach to their circumstances.
And we're trying to get that across. I mean, a lot of what, for the benefit of the viewers, a lot of what we do when communicating outwards is saying, we're here for them, and actually encouraging people like first-time buyers and others, remortgages, to actually go to brokers, because we're saying to them, look, you can get your better options by going to a broker, and not having that reluctance. I think there's a little bit of reluctance that the broker might speak in a language that they don't know, and we're trying to reassure and say, actually, they're there to support you, and they're really trying to bolster the market for brokers. So it's nice to see that's having a ripple effect, and fingers crossed that'll have more in the future. Yeah. Okay, quick question. 2 questions from Richard. I'll throw them all in one go. Would you accept a gift of equity for a buy-to-let? And would you accept rent to buy applications? So 2 questions. Holly, do you want to take them?
Yeah, so gifted equity is absolutely fine as long as it's from a close family member, and rent to buy applications are a no.
Short, sharp.
Sorry.
That's fine. Have you managed to digest David's message so we can answer a question live and see if we can get back to it afterwards?
Yes. So David, I've had a look through your information that you provided. I would say unless he's got a full 12 months as a director in the business at a 22% shareholding, then we wouldn't be able to consider until they've got that full years of accounts. And we won't work off a projected figure. Any projections that you provide are only purely for comfort, that they're going to be working at the same level, if not more profitable in the year ahead. However, as it currently stands, that SA302 for 2021, they'd need a full year as a director before we'd consider their income. I think that's what David wants to know.
What we'll do is I'll David, I'll put you in touch with Holly, and Holly,
Yeah,
I'll give you me. He's dropped a number in our private chat, so we'll pick up there. Any other questions? You have 3 minutes to get them in before we go into telling you where to find out more about Saffron. So 3 more minutes. Any questions you want to put to us? Let's just quickly talk. Tony, you just brought it up. The SLT holiday. It's finally coming to an end. So this end of this month, isn't it? It's completely gone.
Yeah.
So what do you think the effect of that withdrawal of that support there is going to have to the market? It's obviously helped us for the last year. What do you think is going to be the knock-on effect?
Yeah, well, I think we've seen we've seen a slowdown in how there's a reduction in stock in the whole market. We've seen that, I think. So it's definitely having that impact there. I mean, house prices, I think, will naturally settle to a level. I think they were inflated as a result of the hysteria, and I don't think personally, and I'm not an economist in any way, shape, or form, I don't think we'll see a massive cliff drop of pricing, but I think we'll see a natural return to order. What we are seeing in the market, and every broker on this call will know this, is that there's a huge spike of product maturities coming up in October and into next year. So a lot of these 2 and 5 year deals are coming up within the next 3 to 6 months. So that's where the attention is turning. We can see that, certainly.
Brilliant. Okay, we're going to move on. Oh, I've got a question. Sorry. A sole trader, this is from Sean, who changed to director partway through the financial year. What would you need from them on application?
Need a minimum of 1 year's accounts as a limited company director. So if they've changed any shareholding or trading during partway through that year, we'd need a year ahead of that then to work out that we can take their limited company income.
So a year of sole trader accounts.
So we would need
year
of limited company. We would need them to provide, because we'd want to know what is the impact of moving from a sole trader to a limited company, or vice versa. If they were to go back to being a sole trader, we'd need to know the impact.
Wonderful. I don't know if I've missed anyone's questions. Apologies if we have. We will go over them and come back to you. This is a CPD friendly webinar. So the 109 of you are left with us live. If you'd just like to comment in the chat box, if you would like a certificate sent to you, and they'll be sent to you over the next 48 hours from the SFI team. So please just put in a yes, please, or a certificate, please, into the chat room, and I'll make sure those are sent out to you. So let's have a little bit of a chat about what we've been up to. So there are some adaptations happening to the SFI website, but at the moment, I think the key message is to register, right, Tony?
Yeah, definitely. In order to ensure that we've got you on the list so that we can communicate very quickly with you in terms of products and criteria changes, we need you to register to use our intermediary portal. And that's so important as well, because when you're ready to place your case, you've got no extra delays. Now, if you do want to register, it comes in. Holly's team will turn that round in a maximum of 2 days and much less than that. And then you'll get a phone call from one of the team welcoming you to SFI, talking you through what we can do, finding out why you registered and how we can help you. So if you go onto the registration link in the top right-hand corner of the website and click on register, just stick in your FCA number and it will take you through a very straightforward process.
Lovely. Thank you for your certificate messages. They are being logged. Don't worry, we do get the full list. We're not just going to ignore you. Very quickly, you were saying about registering and getting emails, but we are communicating a lot more than we've ever done with a brand new podcast called SFI Not So Live, because we record it at the start of every month. Series 2, episode 2 is out now. If anybody's looking to find it, I'm just going to quickly share my screen. This is how it looks on Spotify. It is available on every platform. So if you use Apple Podcasts, Google Podcasts, anything like that, but this is currently what you will see on Spotify. But if you Google this name with the brackets, you can find it on whatever platform you would like. They're roughly an hour long. We bring some brilliant guests on there, which we and we really enjoyed our time with them. And they're just going to keep coming out. So they launch roughly every month. But once you watch the first one, if you subscribe on whatever platform you're on, you get informed automatically when the next one's out. We look at the news that are affecting the mortgage and property industry. We have a bit of a giggle. And, the guests come on to give a more kind of open opinion. So it's not just all about what we think. As Saffron, this is bringing in the market and having a conversation and touching on some of these news stories. So you might find something really interesting in there. So if you do want to find it, just Google SFI Not So Live podcast, whatever platform you prefer to use. Obviously, I listen to mine on my phone, so a lot easier with Apple Podcasts. Register, and you'll get updated every time they come out. If you'd like to have a go at being on the podcast, get in touch with the team at SFI. I'm sure they can get involved. And we record at the start of every month on a Friday. But it's released the following week. So if you would like to get involved in the podcast, have a bit of fun with us, more than welcome. Send an email to the team. So last thing to do, let's give them phone numbers, emails, web addresses, and everything else. I'll tell you what, Holly, you go. And I'll pick up Tony in a minute.
That's fine. So telephone number for the team is 01799 582 925. That will get you through to the BDM team on the phone. We also have an email box that's shared with all the BDMs, and that is bdm.enquiries@saffronbs.co.uk. And also, as we mentioned earlier, we do have live chat available during working hours. And if you go onto the Saffron for Intermediaries website, which is saffronforintermediaries.co.uk, you'll see a chat button in the bottom left-hand corner saying click to chat, and that will get you through to one of our team that is available. If that box isn't showing, it just means that we haven't got anybody available on live chat because it's manned between the 5 of us, but just keep an eye out for it. And we'll also answer phones at the same time. So bit of multitasking, but there's definitely ways to get hold of us. And of course, we have our 2 fantastic new field-based BDMs. We have Phil Lawford, who covers the North regions, and you've got Simon O'Donnell, who covers the South. So if you want any of their contact details, please do get in touch and we can share those with you.
Just want to bring up something there. We did have a poll where we asked people whether they prefer face-to-face, hybrid, or what. Their face-to-face is still quite low, unexpectedly. Not unexpectedly, sorry, during a pandemic. We get that, but there is progress happening on finding ways to better interact with between the BDMs and brokers in there, Tony.
Yeah, definitely. As I said, look, we're open to conversing with people in any way, shape, or form that they want to. Face to face we love because we can really get to know you and help. But virtually works, group meetings, team chats, whatever you want, just shout. So one thing I would say is if anybody wants a call with one of the team, either as a team meeting for their wider team or individually, just drop the email inbox that Holly, I've got Melanie on the brain there, Holly mentioned earlier. We'll sort out either a face-to-face or a virtual Teams chat to talk you through how we can help you.
Brilliant. I've just unmuted myself. My dog decided to bark. Big thank you to Holly and Tony. So first in season 2, was really excited about it. We're back every single month. So keep an eye on that, our social media channels. If you want to watch any of our previous 9, believe it or not, webinars, they are available on YouTube. If you search for SFI Live, head over to YouTube. If you could subscribe to the channel on YouTube, it will automatically notify you when we put the next webinar on the playlist. So all of these are available on demand. You can reference all the different products we've talked about, all the different things we've done. And we've discussed underwriters 100 times. We do have one with an underwriter on as well. So do have a look. Check out the podcast. A big thank you to the lovely Mel for joining us, if not pre-recorded, but lovely to have your comments. And thank you so much for that. Thanks everyone for watching. Your CPD certificates will be emailed directly to you, and we'll see you at SFI Not So Live early next month, and we're back again mid-September with the next episode. So from all of us, a big thank you for watching, and we'll see you soon.
Bye everybody.
Bye.